Hash oil crash alert. Biggest opportunity for investors right now. Introduction. Why everyone is talking about oil. Oil prices are falling fast, and investors around the world are paying close attention. Whenever oil crashes, fear spreads in the market. Many people start thinking that the economy is slowing down and that more problems are coming. But experienced investors know that market fear can sometimes create the best opportunities. Right now, the oil market is under pressure again. Prices have dropped sharply, and this has created both panic and excitement. Some investors are worried about losses, while others are looking at this crash as a chance to invest at lower prices. Why oil is so important for the world economy. Oil is one of the most important resources in the world. It powers cars, trucks, planes, ships, and factories. Almost every industry depends on oil in some way. Even the products we use daily are often connected to oil production. Because oil is so important, its price affects almost everything. When oil prices rise, transportation becomes expensive and the cost of goods can increase. When oil prices fall, businesses can save money and consumers may spend less on fuel. This is why oil is often called the backbone of the global economy. Wahab, why are oil prices falling? There are several reasons behind an oil crash. The biggest reason is weak demand. When economies slow down, people travel less, factories reduce production, and energy demand falls. This directly reduces the need for oil. Another reason is oversupply. If oil-producing countries continue producing more oil than the world needs, prices naturally go down. Geopolitical events also play a big role. Decisions made by countries or organizations can suddenly change oil supply and demand. Right now, uncertainty in major economies like the entity, country, United States, North United States, China, Ori shows oil crashes, create opportunities. This is not the first time oil prices have crashed. In 2020, during the pandemic, oil prices collapsed dramatically. Many investors panicked and sold their investments. But when the market recovered, energy stocks rose strongly. Investors who bought during the crash made huge profits. The same thing happened during the 2008 financial crisis. Oil prices dropped sharply, but later recovered. History teaches us one important lesson. Crashes are temporary, but opportunities can last for years. How smart investors look at oil crashes. Smart investors do not only focus on fear, they focus on value. When oil prices fall, many strong companies become cheaper. This gives long-term investors a chance to buy good companies at lower prices. Big energy companies like Entity Company, ExxonMobil, American ExxonMobil, Chevron Corporation, Shmu Shell plc, Hess, because they are financially strong. These companies also pay dividends, which means investors can earn regular income while waiting for prices to recover. Other sectors that benefit from cheap oil. An oil crash does not only create opportunities in energy stocks. Many other industries benefit from lower oil prices. Airline companies save a lot of money because fuel is one of their biggest expenses. Logistics companies also benefit because transportation costs become cheaper. Manufacturing businesses can reduce their production costs as well. This means an oil crash can improve profits in multiple sectors, not just oil. Why OPEC matters so much. One of the most important groups in the oil market is Entity Organization, OPEC, Organizati OPEC of the world's oil supply. If OPEC decides to reduce oil production, supply decreases and prices can rise quickly. This has happened many times in the past. A single decision from OPEC can change the entire market direction. That's why investors always keep a close eye on OPEC meetings. What role does the Federal Reserve play? The entity organization Federal Reserve remain high. Economic growth may slow down, reducing oil demand. But if the Federal Reserve starts cutting interest rates, economic activity can improve. Businesses expand, people spend more, and oil demand can rise again. This makes central bank decisions very important for investors. Is this the best time to invest? This depends on your strategy. If you are a long-term investor, market crashes often create strong opportunities. However, it is important not to invest all your money at once. A smart strategy is averaging, which means buying slowly over time. This reduces risk if prices fall further. Patience is one of the most important skills in investing. Final thoughts. Fear creates opportunity. Oil crashes create fear, but they also create opportunities. History shows that energy markets move in cycles. Prices go up, then down, and then rise again. The biggest wealth building opportunities often come when markets are full of fear. If you believe oil will remain important for the world in the coming years, this crash could be a valuable chance to invest. The key is simple: stay calm, study the market, and think long term. Because sometimes the best opportunities appear when everyone else is scared.